Dear members, today, good evening. Today we are here with one more knowledge series. The topic which is very contemporary today, which is emerging opportunities in NSE crude oil options. This is a subject which is of recent introduction where the importance has gained much more attention. Then we have with us Mr. Anup Rijhwani, where he is more than having 15 years of experience in product and strategy development in commodity derivatives with expertise in energy markets. He currently leads the product strategy and development for commodity derivatives at National Stock Exchange. He has proven track record in market expansion, stakeholders engagement, and advocacy, working with intermediaries, government bodies, regulatory agencies, price reporting agencies, and global exchanges. He is experienced in driving revenue growth, product innovation, and strategic partnerships with the energy and commodity sector. Thank you very much, sir. I think, Anup, this is the wonderful session that today we are going to offer to our members in the background of the subject on the crude oil, which is of international importance. So I just request you to proceed with the presentation. Thank you.
Thank you, Dr. Prasad. Thank you for the kind words. We are glad to be part of the ANMI presentation on crude oil options. So before I start talking about NSE crude oil options specifically, and before I start my presentation, I wanted to highlight some key numbers in the Indian commodity derivatives ecosystem. So we keep on comparing the Indian markets with the international market. So if you look at international exchanges, which are like some exchanges like CME, ICE, NYMEX, what we have witnessed in terms of the participation is that the volumes which are happening in the derivative segment, close to 42% of that, around 42% of that is through the equity derivatives products. Next is commodity derivatives, which is 28%. Then interest rate derivatives, which is around 18%, and currency derivatives, which is around 12%. Now, if we compare these statistics specifically to the Indian markets, you will see that the commodity derivative segment in India constitutes close to 5-6% of the overall volumes. The idea behind sharing these numbers is that there is a huge potential, or there's a lot of scope for the commodity derivative segment to grow in India, especially when we are one of the key users of the key non-agri commodities. For example, if you look at products like crude oil, where India is the top third consumer. If you look at natural gas, we are again one of the biggest consumers. If you look at gold, again, we are the second largest importer. In case of copper, we are among the top 5 importers of the commodity. But at the same time, we are still not a price setter of these commodities. So, considering these two facts, like considering the derivatives volume in the global markets, as well as the consumption numbers of the Indian markets, Indian ecosystem for these particular commodities, I believe that there's a lot of potential for this particular segment to grow in the coming years. As NSE, we have launched certain commodities. We are also trying to introduce certain modifications, introduce new products. So what I'll do is through my presentation, I'll cover a lot of details about the NSE commodity derivatives segment. So I hope my screen is visible to everyone. Now, first and foremost, most of the people over here generally relate NSE with equity markets, currency market, interest rate markets, fixed income market. But commodities is something which most of the members, even if they are aware that there is a commodity derivative segment, they may not be aware in terms of which products are being offered in this particular segment, what kind of volumes are happening in these particular products. So through this presentation, we wanted to highlight the gap basically in terms of we wanted to share what kind of products we have, what kind of participation is happening in these products, what modifications we are planning for these existing products, what kind of new products we are planning in the commodity derivatives segment. Now, when we talk about NSE, it gives us immense pride to inform the market participants, which they might be already aware of, that NSE is not only the largest exchange in India, but it's the largest derivative exchange in the world. And not for the first time. This is the sixth consecutive year that NSE has been ranked the largest derivative exchange in the world. So that is a very encouraging factor even for all the stakeholders who are associated with NSE. When we talk about the cash market equity segment, we are ranked second in the world. And um, when we talk about multi-asset exchanges, like one exchange having different type of products like currency, commodities, equities, in that statistics also we are number one. So we are the largest multi-asset exchange in the world. Now, whenever the market participants think about markets, they usually link NSE or link the investments to equity markets. So we wanted to highlight certain factors in terms of, if you look at global asset classes, not only equities or equity indices, but if you compare the commodities as well, they also give you a decent amount of returns compared to these benchmarks. So if you look at products like gold or crude oil, natural gas, they have been performing very well in the past few years, and it always is beneficial for the market participants to diversify their portfolio by taking or investing across asset classes. Even across commodities, you will see that these products, like if you look at gold, palladium, precious metals, base metals, energy, these products have been giving a decent amount of return to the investors. Now, before I start talking about the NSE commodities, I just wanted to highlight certain, rational or certain factors in terms of why people participate in commodity derivatives in general. So what we'll do is we'll talk about commodity derivatives in general first. Then we'll talk about the NSE products, and then we'll talk about why market participants should, invest or trade in the NSE commodity derivative segment. So first and foremost, price risk management. As I mentioned that, India being one of the top consumers of all the key commodities, there are a lot of physical participants who use these commodities. So in India, you will see multiple users of gold. You will see, major users of energy products like crude oil and natural gas, base metals. So these corporates basically use the derivatives, commodity derivatives, to manage their price risk, and which is also commonly known as hedging. So if you talk about the commodity markets, generally in the world, they are termed as VUCA. VUCA means volatile, uncertain, complex, ambiguous. So there is a need for these corporates to use these commodity derivatives for their price risk management. For example, if there is an AC provider who uses products like copper, aluminum, plastic in a production or manufacturing of an air conditioner. Now, the prices of the final product, they do not fluctuate, but the prices of raw materials keeps on fluctuating. So that is where they use these commodity derivatives to manage their price risk. Now, as members of ANMI, and with an access to the market participants, we generally request the members and the broker fraternity that it is a high time that the member fraternity also reaches out to the physical corporates, try to convince them to participate in these commodity derivatives, primarily from the price risk management perspective. Efficient price discovery. So commodity derivatives basically help in determining or discovering the prices or the national prices of commodities. So for example, if we talk about products like gold or crude, these are discussions which happen in every household. Like everybody has an opinion in terms of where the prices of gold might reach, what geopolitical factors will affect the crude oil prices, and whether what kind of impact will we see in energy prices. So the when you have these kind of discussions, amongst your family members, amongst your peers, amongst your colleagues, now NSE basically, there are different states with different prices. For example, if you want to know the historical price of, let's say gold for the last 3 years, if you want to take an investment decision, uh, you will find that every different state will have its own different prices. Every state will have different taxes, different fundamentals. So there is not a price which reflects the national indicator, or it's not a national indicator of, let's say, gold prices. Now NSE plays that part where we have spot prices which are available on a daily basis. We have futures prices, where you can log on to the NSE website, see the price trend for the last 3 years as a national benchmark of, let's say, gold, and then take an informed decision on your investment. Trading objectives, as I mentioned, that in India, everybody has an opinion on commodities, like where the prices of energy will go, where the prices of gold will go, where the prices of silver will go. Now, with that information or with that interest, if you want to participate in the commodity markets, where do you go? So, uh, it's fairly simple or fairly easier to buy maybe silver or gold, but it also comes with a lot of challenges. Like it's a very capex heavy investment. There are logistics involved, that you have to take physical delivery, store it in your respective locations. Now, that is still possible for gold and silver, but if you talk about products like copper, or if you talk about products like crude oil, natural gas, there is no possibility for you to take the physical stock of these commodities. Now that is where futures comes into picture. That is where you can participate in the commodity derivatives and use your knowledge on that particular commodity to get decent investment returns. And last but not the least, it's basically a national motivation, a national factor, because as I said, like India is one of the top consumers of all these key commodities. Now, the reason, even after such heavy numbers of consumption, we are still a price taker for these commodities. Now, the reason that these prices are discovered in the international markets, or are more admired in the international markets, is primarily because of the exchanges which are operating there. So, if you look at uh, base metals, LME is one of the biggest exchange which provides base metal derivatives. If you look at energy products, NYMEX is one of the exchanges which provides these products. If you look at maybe Brent crude oil, ICE, provides these kind of products on their platform, and they are very liquid. So the idea is basically that a liquid futures contract in a particular geography helps that country to become a price setter of that particular commodity. So we have a similar kind of vision for the commodities in India also. When once we already have a lot of products which are there on the market at NSC, and we are planning to add certain commodities. We are planning to push for participation in these particular commodities with a vision to ensure that these products become quite liquid and become like a price setter, and it helps basically India to become a price setter of these commodities. So as I said, this is more of a long term vision, with which we see the commodity derivative segment. Now, as I said, why we have tackled that particular part in terms of why people participate in the commodity derivative segment in general. Now we will move on to the commodity product basket, which is available at NSE. So right now, as you all aware that NSE is more of a recent entrant in the commodity derivative segment. So just to give you a background, that the commodity derivative segment was started in India in 2004. Now, at that point of time, NSE was not allowed to launch a commodity derivative segment separately, because the that particular segment was regulated by a different regulator by the name of FMC. So NSE at that point of time invested in an exchange called NCDX, which offered commodity derivative exchange, but NSE was not enabled to launch that commodity derivative segment as a segment on its exchange, on the stock exchange. So But after 2015, when commodity derivative segment was put under the regulations of SEBI, SEBI also had that vision to vision of universal stock exchanges where exchanges can launch every product which is under the regulations of SEBI. So in 2018, the regulations changed. The concept of universal exchange was introduced, and NSE was enabled to launch the commodity derivative segment. We initially started with gold and silver products, but till 2023, uh, the segment was basically uh, the focus was mainly on the other products or the other segments. And with 2023 coming into picture, 2023 we launched key products such as crude oil derivatives, natural gas derivatives, and we started pushing for participation. And we have seen a decent amount of participation coming in into those particular products. Then we went ahead and launched electricity futures also, where we have a market share of 70%. So the idea is that what we have witnessed is that in the products which are already there since 2004 2005, which NSE has launched recently, we have been able to take a decent amount of market share as of now. But the products which are being launched going forward, or which are unique products, NSE is the clear winner. So for example, electricity is the product we launched recently, and we have a market share of 70% in that already. So the idea is that with the modifications that we are planning in the commodity derivative segment, and with the products that we are planning to launch here, we are hopeful that the commodity derivative segment will flourish further. Now, talking about the NSE crude oil contract specifically, we have two futures available, and we have one option contract available on crude oil. We have 100 barrels futures, we have 10 barrels futures, and we have options on crude oil futures, which is again 100 barrels. So this is one of our flagship products because we have seen a lot of participation in this particular contract, and uh, recently we have made a very significant modification into this contract also, which I'll talk about in the upcoming slides. So the key benefits of participating in these contracts is, first, it's a cash settle contract. These are settled directly on the NYMEX crude oil prices, which are converted into INR. So if market participants are interested in doing an international arbitrage, based on NYMEX prices and the Indian NSE crude oil prices, then uh, there are good benefits or good opportunities for market participants to do that. The contract size is quite low. So if you compare it with any other precious metals, the contract size of energy crude oil products specifically is close to 6 lakh rupees. There is high daily volatility, which is close to 2 to 4%, which is very lucrative for any market participants to invest in. And the most important is the price and fundamental data information is very conveniently available. So I'll be covering a certain slide on that in terms of what kind of information you can look on, and what is the frequency it's available at, and how you can use it to uh, get fundamental information on that particular product. The factors which affect the prices of crude oil specifically are the US crude inventory. So as I mentioned, that these contracts are basically settled on the NYMEX crude oil prices, and the US crude inventories play a very important role in the prices of crude oil. Economic factors. So crude oil is known as the barometer of an economy. If crude oil, if the economy is doing quite good, you'll see that the crude oil prices or the crude oil demand of that particular country also rises. So economic factors like the economic growth, recession, inflation, they also play an important role. Geopolitical actions, as everybody is aware that geopolitical actions have an impact on the demand and supply of the commodity, albeit affecting the prices of the crude oil contracts. OPEC and non-OPEC decisions in terms of their output, global economic growth, and ESG policy. So these factors basically, as most of the market participants or most of the listeners here are aware, that these are the factors which affect the prices of crude oil. And as I mentioned that as part of the member fraternity, there should also be focus on reaching out to corporates and if a particular member needs assistance or needs support in terms of reaching out to corporates, and we can also help that particular member with joint meetings to ensure that these corporates basically participate in the commodity derivative segment in India. So most of the industries, if you look at transportation, petrochemicals, manufacturers of glass, tire, everybody is affected to aviation industry. They are affected to the Brent crude oil prices. So if they are convinced to participate in the commodity derivative segment, that will be a big win for the country as well, because then the contract itself will also develop. It will give you more investment opportunities for the market participants, for the members overall. So talking about NSE Crude Oil Options, as I mentioned that we launched these contracts in 2023, specifically October, and it's been close to 2 years now, and we have seen a lot of participation being developed in this particular contract since the inception. So you'll see that the participation has been rising. Obviously, there are ups and downs depending on the fundamentals or the prices of that particular commodity. But we have seen, on a regular basis, uh, the average daily traded has been rising. So if you look at the EDTQ, it has been rising. It has risen close to 200% compared to the previous year. If you look at the premium turnover of these options, it has also risen close to 800% compared to the previous years. And we have seen a participation of more than 3.76 billion barrels. The average daily traded quantity also rose in this particular quarter. So the idea is basically that with the launch of these crude oil options contract, there's a lot of participation coming in this contract. That is one. Second is, there was a perception in the market that commodities is only available on exchanges like MCX and NCDX. But that is also slowly changing now with NSE also having access to these products. We have seen a lot of activity in terms of member development, in terms of increase in UCCs, increase in authorized person, increase in FPIs. All these, have been a result of the success of the crude oil options contract. Now we have close to 245 members who are active, enabled to trade on the NSE commodity derivative segment. Uh, Approximately 3,400 authorized person, more than 80 FPIs who are enabled to trade in the NSE crude oil options contract. So this, as I said, it's primarily the result of the success of the NSE crude oil options contract. Now, our vision when we launched these contracts was primarily to have the contracts which are available on the other exchange platform, to make it available here also, which will help or enable the members to activate themselves with NSE or NSE commodity derivative segment. So with the launch of crude oil options contract, we saw that, as I mentioned previously, that we now have seen a lot of increase in APs, UCCs members. Now the next step for us is to introduce unique modifications and unique products within the commodity derivative segment at NSE. So the first the one of the initiatives that we have taken very recently is that we have revised the expiry date of NSE crude oil options. Now previously, so these options are basically options on futures contract. So at the expiry, if your position is ITM in the money, these positions will devolve into underlying futures. Due to that, the expiry for these contracts basically was two business days prior to the expiry day of underlying futures contract. Now we have revised it and made it to 7 business days. So first expiry of this particular contract, which it fell on December 9th, and the next expiry will fall on January 7th. So now with this particular change, first I wanted to highlight some of the reasons why we made this particular change. So as you all know that any with the expiry date of any options contract is very significant for the market participants because of the time decay, because of the increased gamma exposure, high turnover, hedging and trading opportunities. So the idea is that uh, we see a lot of participation coming in the options contract closer to the expiry of this contract, primarily because there's a lot of volatility during that time. The option pricing also becomes more economical. So the theta effect or the time effect also keeps on improving. So considering the significance of expiry date, we show we had a discussion with the market participants. So we continuously engage with the market participants to understand that what kind of changes we can do in our product to make it more attractive for them. So one of the market feedback, considering the significance of the expiry date, one of the feedback we got from the market was to look at revising the expiry date of this crude oil options contract, because the other exchange platform also has the same contract available and has the same expiry. So the feedback was that if you look at changing the expiry, the market participants will basically get two different option contract, two different expiry on the same underlying. So that helps them in terms of giving it. It basically gives them a lot of flexibility in participation. Every member, every market participant has a customized investment horizon. So they will have different investment patterns or investment trades or trade patterns that they have designed for that particular, or strategies that they have designed. Now it gives them additional flexibility. So for example, if you already are participating on the other exchange platform, let's say as per the current expiry norms, now, with the revised expiry norms, you get an option to participate on the NSE contract as well. You're freeing up your funds, making the investment convenient in terms of option premium and all these things, right? So that is why we made this particular change. Now, as I was talking about the hedging and investment horizons, like if you look at the options expiry schedule also, uh, across different segments. Like if you look at equity, if you look at currency, if you look at commodities, most of the expiries usually fall during the second half of the month. Now, with the revision that we have done in this crude oil options contract, you will see that the expiry of these contracts falls in the first half of the month. So that frees up a lot of your collateral, your funds, and it equips your strategies to ensure that during the first half of the month also you have an option where you can invest, and then during the second half of the month where you have multiple investment avenues already available in the equity and commodity segment, you can shift your focus towards that also. So it's as I mentioned that it gives the market participants a lot of flexibility to alter their trading strategies. Staggered expiry rates. So if you look at if a particular contract is expiring on both the exchanges on the same day, there is always a risk in terms of risk in terms of rollovers, margin and settlement congestion. Now, with two different exchanges having two different expiries on the same underlying, you will see that the expiry risk which arises during the day of expiry, that gets staggered or that gets divided between two different contracts. So that also is very helpful for the market participants as well as the exchanges. Portfolio diversification, as I mentioned, that this revision equips the market participants to diversify their investment strategies, their portfolios into two different contracts on the same underlying. So the strategies that you had, for the other exchange platform for the second half of the month, you can apply the same strategies during the first half in at the NSE commodity derivative segment. As I was talking about the important data points, as I mentioned that the information is conveniently available when we talk about crude oil. So information such as the supply of OPEC and non-OPEC, the inventories, the demand of OECD countries, the price pattern of the exchanges in the global markets. Everything is relatively easily or fairly available on the, if you look at the if you look at websites like investing.com, if you look at websites like Forex Factory, all these information is conveniently available. If you look at EIA website in US, they also provide these kind of information on a very frequent basis. So if you look at all these reports, they are available on a monthly and a weekly and a quarterly basis, where you can read about this read about the statistics of the crude oil markets and natural gas market, understand the data points, and use it in trading in the NSE commodity derivatives. Just a small example, if you look at crude oil inventory data, which is given by EIA on a weekly basis. So it is nothing but the levels of inventory. So first they give a forecast, like in terms of what they anticipate the inventory level will be, and then they give the actual inventory level data. So that also plays a very significant role in the crude oil prices. So if you look at uh, for an example, if you look at an actual figure, let's say, so EI basically gives an anticipated inventory level. For example, if they forecast that the inventory level will be, let's say, close to 10 million barrels, but the actual numbers of inventory comes to 5 million barrels. That means that the inventory is less than anticipated. That means that the demand has been high or the supply has been low, and that means it is bullish or it is positive for the prices for of crude oil. Now, if you look at the inverse scenario where the forecast is, let's say, 10 million barrels, but the actual inventory comes to 12 million barrels, that means that obviously the supply is high or the demand is low. Either ways, that it may have a bearish impact on the prices. So this kind of information is conveniently available, on the AI website, on Forex Factory, and all those websites. So this is available on weekly basis on Wednesday at 9 p.m. India time. You can look at those prices. There are a lot of channels which deliberate on the impact of this inventory data. You can visit those channel or have a look at that point of time on those channel YouTube channels, and take an informed decision on your investment into crude oil products. So as I mentioned that apart from the modifications that we have done in the crude oil contracts recently, we also launched new products such as electricity, where both the exchanges launched the product at the same time, and we have been able to garner a market share of 70%. So the idea is that whenever we are launching any new products or unique modifications on the NSE commodity derivative segment, we are the clear winners, because there are multiple reasons why market participants choose NSE or choose to trade on NSE. So let's cover those points now. Why market participants usually prefer to trade on NSE or NSE commodity derivative segment. So first and foremost, again, as I mentioned, that it is the number one derivative exchange in the world, and it provides you with a robust, safe, and resilient technology platform. So if you face any technology related issues on the other exchange platform, and if you look at the volumes and the participation happening on the other exchange platform, it is just a fraction of what is happening at NSE. So if you look at the equity derivative segment, currency, commodity segment, and NSE, the number of orders or number of participants actually investing and trading on the NSE segment is very small. Even after that, we continue to provide the market participants with a safe and resilient platform, which is not affected by any issues with that particular any issues in that technology platform. So it helps the market participants who are actually looking to participate in the commodity derivatives segment seamlessly without any issues arising into it. The next major benefit of participating on the NSE commodity derivative segment is the collateral fungibility. So this is one of the key points for all the members. So uh, whenever you invest into equity markets, the equity markets usually gets closed at 3:30 p.m. After 3:30 p.m., the unutilized collateral that you have in the equity segment, it can be conveniently transferred from the equity segment towards the commodity derivative segment. You can participate into the NSE commodity derivative segment till 11:30 p.m. at night, and then after that you can transfer your unused collateral back to the equity segment for the next day trading. So again, this gives a lot of flexibility to the market participants because their unused collateral, which was sitting idle with the clearing house in terms of there's a lot of potential for you to invest that unused collateral towards the commodity derivative segment and ensure that your money works for you. So keeping your collateral unutilized or for more than half of the day is leading to a lot of opportunities which are being missed by the market participants. So if you want to shift your collateral after 3:30 p.m. towards the NSE commodity derivative segment, you can reach out to your respective relationship managers, or you can reach out to us, and we can guide you in terms of how you can participate or how you can transfer your collateral, unused collateral, after the equity segment is closed towards the NSE commodity derivative segment. So again, as I said, this enables the market participants or the members with a huge potential to ensure that their collateral is being used effectively. Uh, as I mentioned that even though we started the commodity derivative segment in 2018, we have been historically associated with commodities because we took a stake in we were one of the promoters of NCDAX. We are one of the shareholders of spot exchanges like power spot exchange like PXIL. If you talk about gas spot exchange IGX, we are one of the stakeholders of these exchanges. We have multiple assets under one roof, so it's like your one stop solution. You can, if you want to trade across multiple products on a single exchange, we are your destination. Economical transaction charges. So this is one of the key benefits of the NSE commodity derivative. So if you're participating on the NSE commodity derivative segment, we charge a transaction fee of rupees 10 for against rupees 1 crore. In the futures, on the competitor platform, the same amount is 175 rupees. So we are just a small fraction of the transaction charges compared to, we are just charging a small fraction of the transaction charges which are charged by the competitive exchange. Similarly, for options, if you look at the transaction charges in the competitive exchanges, it's close to 4,180 rupees for 1 crore. We are just charging 100 rupees. So it's a very small fraction of transaction charges that we are charging compared to the competitor. That this particular factor helps you to ensure that with even if there's a single tick movement in the same contract on the competing exchange or on at NSE, you will see that you're earning a better profit here because because the transaction charges are so economical compared to the other exchange. And apart from that, the settlement guarantee is given by NCL, which is again a triple A rated stable company. So that instills a lot of it basically instills a lot of security, hope of security amongst the market participants because their settlement is being guaranteed by NCL. Now, if any of the members who are already active on the NSE equity and equity derivative segment and wish to enable the commodity derivative segment, they can reach out to any of the relationship managers, and they can help you in terms of how you can enable it. It's a very simple procedure. NSE will give you a list, and most of the documents are already available with the exchange in terms of through your membership in the equity and equity derivative segment. You can use that particular documents, and it's a fairly simple procedure in terms of enabling your commodity derivative segment. So our relationship managers can easily guide you on how to do that. With that, I would like to end my presentation. I hope that I was able to share a lot of fruitful information for the members who are keen on participating in the commodity derivatives sector.
Thank you very much, Anup. This is very detailed and threadbare into the each of the features of the crude oil contracts, how the global scenarios and mapping with the local, and very informative as far as the features are all concerned. With respect to the number one of the commodity derivatives, the crude oil, this India National Stock Exchange occupies the space at the top level. This is a hearty congratulations to you and the NSE for making such a wide mark in the globe. This is the one of the definitely reaching our members to get into the details and get take the benefit out of it. So we have on the YouTube, our members also will be those who could not see while it is live today. They will be able to see while days progress. So that we will take up this on separately by emailers also to our members. This is a wonderful opportunity to our members. So our president who was supposed to join couldn't join today. We apologies for that, and because of the exigencies. And anything that closing remark you would like to say before we end the session?
Thank you, thank you. No worries at all, Dr. Prasad. It's always a wonderful, it's
Absolutely.
always a pleasure for us
Yeah.
to speak to the ANMI representatives and pass on our thoughts and messages.
Absolutely. Thank you very much for your time coming on to this webinar. And as a knowledge series part, as a Pan India, we will be taking up the feedback, and also we'll come back to you for another session on the similar lines in the future. Absolutely.
Absolutely.
Thank
Always.
you. Thank you.
Thank you. Thank
Thank
you.
you.